Welcome back, VIP. I just want to walk you through the setup that I announced this morning for an Asia long bullish breaker setup, okay, which was here that you see on the screen. Let's actually go to the charts and talk about this on the chart. So first, I want to make sure you understand what a bullish breaker is. We have a bullish breaker when we have a swing low, a swing high, then a lower low, and a higher high, okay? The higher high must take out the swing on the left that created the lower low. We not only have a change in market structure, but we also have the bullish breaker, which is essentially the last up candle in the swing high, right, that we've now traded above, right? And that swing high is important because it created this lower low, okay? Because if you think about the trend at that point in time, really the trend should be we're coming from down here, so a low to high makes a new low. This move should come up somewhere as a pullback, right, and continue lower. The fact that it doesn't do that, and in fact goes and makes a new high, right? Taking out this swing high on the left that created this swing low, which is a low swing low at that point in time, is a change in market structure. The trend from that point is essentially bullish, right? Okay. And so therefore the last up candle in that swing high that formed this swing low is our bullish breaker. Okay. Now it doesn't have to be just the last candle. I marked the last candle. Okay. But it can be, ICT teaches us that it's the entire sequence of up candles, okay? Essentially what that means is it's on a higher time frame, right? Now, two questions I got. One was, why did I look at this on a 30-minute chart rather than a 15-minute chart? So to answer that question, these can be on any time frame, 5-minute, 15-minute, 30-minute, okay? I like to switch through different time frames until I see something that I like. So for me, a 30-minute time frame, I like candles in three formations, right? You've heard me say many times, I like it when the market takes that liquidity using three candles. So when I switched it through the chart, this is the one that I like the most because it had three down candles that took out liquidity, and then that's where the reversal formed. And that last up candle for me is the bullish breaker. Okay. The second question I got was, well, how do you trade this? Because ICT says that you need to get a close above the bullish breaker and then pull back into the bullish breaker for a long. Okay. So for example, the official rule is that you get a close on the time frame you see the bullish breaker. Okay. A pull back into the bullish breaker. That is where you take your long to expect repricing higher. Okay. And then you expect that long to reprice higher. Now, there's a couple of things here, okay, to learn. So ICT says you can trade off the bullish breaker when it's inside of the bullish breaker, right? Now, there's a couple of things here that I want to point out. I want you to focus on this price action here that's inside the bullish breaker. That there is a balanced price range. Let's talk about that, understand that a bit more. So to do that, I'm going to just turn off all these drawings. Okay. Now I want to look at, so that's the bullish breaker. Okay. So these three candles, this price action that we are looking at, let me turn off on these lines again. So just have a note of where the bullish breaker is, right? These three, this section here of price is what I want you to focus on. Okay. Just inside of there. I'm going to teach you how that is a balanced price range and why we can trade inside of there, expecting repricing higher, just as if we got a break above the bullish breaker and a push back into it for entry long. Okay. Now I'm going to turn off the drawings and I want you to look at this. So we opened here, we went higher. This wick went up, okay, and we came back down, right? Up and down. Then the next candle opened, went down, went up, in that wick came down, okay, next candle opened and we went down and back up, right? All of that is balanced because we've had price delivery up and back down and up again through that wick, right? And that wick and back down through all of this up candle down to the high of this wick. And then we have movement up. This is still unbalanced, but everything in here is balanced. There's no inefficiency in that price range. I'm going to put a box around that. Actually, I may have a box around there already, do I? No, I don't. So let's put a box around there. So this is the price that I'm talking about, okay? Inside of there, that range there is fully balanced. We have price delivery up, down, and as the market's going down, up through there, up, down, and back down, right, into that wick, and then all the way back up. So that box, fully balanced, okay? If I jump down to a 5-minute chart, let's go to there, okay? You can see how it's completely balanced. There's nothing on this chart that remains inefficient, right? You got up, down, up, down, up, down, up, down, all the way, and down even through this fair value gap down and back up again. So inside of there, it's completely balanced, and therefore we can buy inside of that balanced price range, which is inside a bullish breaker. Okay, that's why we don't need to wait for a close and a pushback down, because once the market leaves that range, it's not going to come back down here. This is fully balanced. And that's why you see it just leave. Okay, not only that, but you can see bullish order flow here, order block, right? Displacement, there's a gap there, pushing down to that order block. Okay, again, move up, pushing down to that order block, move up, right? Displacement, fair value gaps, pushing down into that order block. So everything is balanced, and you have bullish order flow. Okay, so seeing all of that, I've taken along at the new hour, which is 9 right there, right? This is all happening at the new hour. So I've taken along in that price zone there. My fill was 27.26. So I've hit it basically at the new hour. Okay, just as this is starting to leave that price point, I've hit it, and then my broker has filled me at 27.26. Okay, you'll see it on the execution video. Okay, so I hope that answers the question of one, why did I enter even though there was no close above the bullish breaker? Okay, right, no close above the bullish breaker on this 50-minute chart. Prices continue to go up. And number two, why did I use a 30-minute time frame to recognize that bullish breaker? That was simply because I like to see 3 candle formations when I'm looking for where the market has taken liquidity. Okay, and then obviously you have the low, the high, the lower low, and the higher high. That confirms your bullish breaker. But inside the bullish breaker, we've got a balanced price range where we can enter long to expect repricing higher, because we're not expecting price to come back down here once it leaves that range price. Okay, so that was why I was able to enter at that level. Hope this video is useful. I will now talk with you in a future video.